So lesson number 1, please write this down. Never risk 1.6% on any trade unless you have a profit factor of 10. If you do this, you can lose 61 trades in a row and not blow up your account. Now, I don't want you to lose 61. But if you get on a cold streak and you lose 10 or 15 in a row, you can still be good. Number 2, select the number of trades that you are going to take for the year. Type in chat, how many trades are you actually going to take for the year? Because I see you guys talking about futures, derivatives, trading GameStop, Nvidia, AMD. You guys are happy the market was up today, even though you guys are crying Friday. I need you to know how many trades are you going to take for the year. Please put that in chat. And number 3, you need 3 targets. So in the dream team, we have 3. We have one short target, that's 31.2% return. Our medium target is 200%. And then our big target is 400. So like when AMC goes crazy and it goes parabolic and goes up 200%, we're really not worried about it because in the futures market, once every 2 weeks, that's a sustainable goal that we can hit with no issue. Okay? Number 4, I hate to break it to you, but are you rich from trading? If so, you can trade. If you're not profitable, you cannot. So the thing is, like, so many people are talking about trading, not many people are actually making money from it. And that is the end all be all goal. It doesn't matter if you know everything about the market. What really matters more than anything is, can you actually be able to take money from it? Number 5, you must have an edge that you can improve upon, but never change. So once you have your system in place, you want to be able to make slight improvements to it, but you don't want to system hop. So if you're trading momentum or a moving average, breakouts, you have to focus on that. But I don't want you to change and then start trading VWAP or triple crossover or Fibonacci fans or something like that. Put in chat, I'm going to stick with my trading system for 1 decade. For 1 decade. Number 6, do not trade in front of an economic report. So if Powell is speaking, I want you to stay away from that report. If any natural gas crude report comes out, stay away from that information. Trade a couple minutes before or a couple minutes after. Okay. Number 7, if you take 1,000 trades, how many will you win? You have to know this. How many will you lose and how much will your returns be? If you do not know this, you are simply gambling. Okay. And I don't want you guys to be here to gamble. And then number 8, market tends to trend for 20 to 40% of the time. And after that, they are very, very, very choppy. Number 9, if you cannot trade in a bullish market, in a bearish market, in a choppy market, you cannot trade. So you have to be able to make money whether the market is going up, going down, or we're flat. Usually when the market is flat, that is a sign that a breakout move is going to come. You have to be able to trade in all 3. Last year, because of quantitative easing, everybody was able to make money. This year is going to be a lot more difficult, okay? Number 10, you need a target for all 3 markets. So regardless of what market you trade, you have to be able to execute and perform and make money in all 3. Number 11, be loyal to your system, but not to a position or a company. I cannot wait for the day when Tim Cook retires and then I can say, hey, Apple's no longer good. It was once great. It's terrible now. You have to be in love with your process for making money, but you can't fall in love with the company because a good company can go bad and a bad company can eventually go good. Number 12, this is very important. Trade the asset that you are most profitable trading, not the one that you like the most. So for those of you trading futures, you may like trading NASDAQ or gold or crude a lot more because they're faster, but ZB gives a lot more safety. So you want to trade those. Number 13, I talked about this before, but not many people actually do it. You want to risk $1 to make 25. So the higher the risk to reward ratio is skewed in your favor, the higher the probability you can do well in the market and you'll be here for years to come. Out of all these lessons so far, please type in chat really quick which one makes sense to you. Number 14, I know you guys don't want to hear this, but risk control is all that matters. Snipers die less than gunslingers. So if you guys are always looking To take on a bunch of risk, or you have a 1-to-1 ratio or a negative risk to reward ratio, it only takes one bad report, one fat finger trade, and everything will fall apart for you. If you're risking 1 to make 25, you're going to do pretty damn well. Number 15, write this down. If we have a record down Friday or a hard drop on Friday, we usually have a record down Monday following it. So on August 24, 2015, when we had that big drop that was one of my best trades, that Friday, the market dropped, and then Monday did the same. You can take advantage of it. For my swing traders, if you are shorting the market and we are on a precipitous decline, you want to short from Thursday through Tuesday to be able to get an edge, okay? Number 16, a contraction of the market usually leads to an explosive move. It's the calm before the storm. So when the markets get really tight and we're ranging, and let's say we stand between 130 to 125, a breakout move is either going to come to the upside or the downside. Number 17, when too many people are doing the same damn thing, the market will go through an adjustment period or correct itself. So last year, everyone was able to kill it in futures, options, stocks. You're going to see a lot more damage happen this year in people's accounts because the market is going to correct itself. Number 16, if you think it will break to the downside, please write this down. It's very important if you're intraday trading. Let's say you're getting into the market and you don't know which way the ES is going to go up. You know you can set a pending order on the bullish side if we break out to the upside. And then if you think we're going to drop, you can set a pending order on the sell side as well. So regardless of which way the market goes, you'll be able to catch the move. Now, this still has to factor into your number of trades for the year. But if you just don't know which way the market is going to go, I don't want you to gamble. I want you to follow the color of the candle. But you can set 2 orders. So when you get into the market, if we have a huge breakout to the upside, you'll catch the bullish move, or we'll catch the bearish move. And then once you're in one move, take the order off. Take the order off. So this is called top and bottom trading at the same time. Number 19, most traders never truly know direction because they do not invest long term, and I want to thank you. A lot of you would do a hell of a lot better if you started buying a position around NVIDIA, XLK, AMD, Novavax, Teladoc, any of those. Because when you wake up on a Monday, like today, if you saw that your portfolio was up, you had an inclination that the market was going to go up. Number 20, trade the prime time or when the funds are most active, or you're going to get your account chopped up in the middle. Number 21, always use the stop loss in case of a limit up or a limit down event. I know some of you like naked trading, and it's fun. It's fun to be able to catch moves to the downside for 500 points and make 40% in a day. What happens if you short the market like the guy from Melvin Capital and the entire market pushes up against you and now you're down 90% and you don't want to get out? That sucks. Okay? Number 22 is important. This is why I tell you to limit the number of trades. Losing begets losing. It is an energy. The reason why most people lose so much is because of overtrading, lack of following a plan, and most people know how to trade, but when the screen comes on, when it's time to actually trade, things do not work as well as they should. Number 23, undertrade, or your account will catch a fade. If you have a close relationship with your broker, go ask them, are there any retail investors that are investing in the market that make a lot of trades and they're profitable? Regardless of what platform you go through, they're going to say no, unless they have an algorithm or software. If you take a bunch of trades, and once you surpass 220 trades in a year, you're going to get dominated and destroyed. Number 24 is important. So we all know Ray Dalio has his all-weather strategy. But do you know you can use that same all-weather strategy for trading futures? So go look at the allocation of what he has. So let's say you have 100 trades. That same allocation that he has for gold, the bond market, and equities is literally the number of trades you should take. And you can use that same strategy for intraday trading on the future side as well. 25. 48% of people have not planned for retirement. And if you have not done so, please do so today. For my business owners, invest $5,000 or $10,000 a month. I know some of you in the comments are going to be like, hey, I don't have it. For those of you that do, I'm going to be very honest. Would you rather have Tim Cook working on your team or Elon working on your team, or the employees and current team members that you have? When you tie your money to bigger corporations than you, you're going to have safety even if most of your clients and customers leave. Number 27, set a percentage of money that you're going to invest for a year. If you're investing 46 to 51% of your income, shout out to all my fire people, you are going to have a great chance to be able to retire in less than 7 years. 28. You need to be able to hit your goal in 20 or 52 trades for the year. No ifs, ands, or buts about it. If you cannot get to your income goal with 20 or 52 trades, you need to recalibrate the asset that you're trading and how much it pays you. For my overtraders, I used to be one of you. Hi, my name is Ian, and I'm a former overtrader. I know all the tricks and the schemes to act like you're not. The truth is you overtrade because you are afraid of the responsibility of winning. And you'd rather be broke than to be responsible for winning consistently. Because once you start to win, you then have to be accountable. If you're an overtrader, put OT in the comments. You deserve it, and you are worthy of making money. Overtrading is a cancer to your portfolio, and you're going to have a loss that is so fucking devastating that it's going to break your soul. Even on the institutional side, most traders only stick around for 4 to 6 years. Over leveraging, straying away from their plan. You are worthy of winning. And I'll wrap these up. Number 30, do not bet the house on any particular trade unless you know you have a 100% chance of winning. If you ask, how do I know that I'm going to win this trade? You don't have an edge that will tell you. There are some trades without the shadow of a doubt, you know as soon as you put it on, you're going to win. If it's not that, do never invest all of your money on one trade. 31, always use protective stops on each trade. One indicator on your screen, and that's it. You don't need 2 moving averages, an EMA, VWAP, RSI. If you cannot take your trades or place your trades with that one indicator that you have on your screen, you don't need them. So if you can trade off RSI alone intraday, keep it. If not, kill it. Okay? 33. Until you work out your inner demons, success will be hard for you to obtain.